What is decarbonized energy? What does that mean for Tesla? And what is the valuation of something like that? This is the Not Even Wrong podcast. It's October 17th, 2020. This is Krim Delco. It's a Saturday, so there's no update for today. I want to talk about decarbonized energy as a theme and what it means for valuation today. I think there's two aspects to this question. One is the decarbonized energy theme and what we should do with it, and second, how we should value it. And I want to start with the second one, the valuation question. Just because we have a theme, just because we have an idea, doesn't mean we should attach any value to it. That Tesla, as good as the company is, doesn't deserve value just because they have ideas, or even worse, just because we investors come up with ideas. That's not the point. I think we need to be very careful. And what I've noticed in the last couple of weeks is that a lot of analysts are following the stock instead of coming up with their own genuine ideas. What that means is the stock keeps going up and they start adding reasons why the valuation should be going up. And that is a very dangerous game. It shows that the street has lost the stock. It shows that there is no conviction amongst people that follow the company. There is a slew of investors, they call themselves retail investors, people that have been around for a long time. They don't have a problem with the valuation of the company. I would say we are in that same field, even though we're not retail investors, because we've been arguing that this company can be a multi-$100 billion company by now, just based on the business prospects that we envisioned even 5-6 years ago. Now, today, we stand here, we're looking at a company that has moved from a software and car and electric car company to a decarbonized energy company. And that is not just a theme in a sense that we believe that this can be realized. This is part of the mission of the company. And what it means is that you have solar power, which is transformed into electric energy and then used in different end markets: transportation, housing, factories, through utilities, utilities also as an end market. So you have a decarbonized energy infrastructure which is being built by Tesla. I've spoken about the usefulness of competition in this market, and my conclusion is that competition right now is not very good for Tesla, because Tesla is creating a new market. And in that sense, until that market is created and built and the value chain and in the innovation stack has been built to the point where it can become cost effective and penetrate a lot of the customer base, until that happens, it is actually detrimental to have competition. And I think that's why Tesla is doing the right thing by focusing on the 0 to 1 and the innovation stack concept, which is to completely monopolize this market, control all the parts of the value chain that are important, so nobody has a chance to compete until the market is ready enough and the components of the value chain are commoditizable. But we're pretty far away from that right now. Now, that for valuation, that means that you have to look at the company from a very different perspective. You have to say, well, there is a $1 trillion market that they're trying to disrupt, and therefore we have to think about some sort of valuation. Now, I want to put a caveat here. Just because you're attacking a gigantic market doesn't mean you deserve the valuation. So this is very important. And I think the market, to some extent, is pricing it also properly. So, for example, if you looked at Amazon 20 years ago and you said, well, they're attacking the retail market is maybe $1 trillion in the US. So this company can get half of that, $500 billion. And, we should give them whatever, 2-3 times sales. So the company should have been a couple of $1 trillion even 20 years ago. That obviously would have been pretty crazy, because you can't just look at the end goal and then sort of say, well, you're going to get a big chunk of that market and therefore you're valuable. Of course, there has to be a certain path, a certain milestones have to be achieved for the company to start deserving that value. Or in other words, what Wall Street always says is you have to start de-risking that theme. And I think this is the key point, the de-risking of the decarbonized energy theme.
So de-risking of the decarbonized energy theme is the name of the game with Tesla. So if you take the end game, so 2030, we have a decarbonized energy infrastructure which is completely controlled by Tesla in a similar way that Apple controls the smartphone, iOS, or Amazon controls online retail and distributed computing. In that same realm, I think we could argue that Tesla will control the decarbonized energy infrastructure and be the market leader in distributed living, which is another concept that we discussed in the previous episode. So those markets together are several $1 trillion, let's say $2 trillion. Tesla gets half of that market, a trillion times maybe three. So we're looking at a market cap of maybe $3 trillion. We are today at 500 billion, so we're looking at a 6x in 10 years. This is roughly, I think this is the math that works for most people in the market. It's decent, it's not crazy, it's of course very visionary, and a lot of people might say, no, 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 that's not for me, but for us, this is a good working assumption. So we're looking at a market that is a few $1 trillion, and Tesla gets maybe half of that market. So we said 2 trillion, half is one. You give them three times sales, so 3 trillion. We're at 500 million now. I think it's much more, there's more potential than that, but this is a good working assumption. If you look at 6x in 10 years, that corresponds to a 19.5% CAGR, which is lower than what the company has been doing previously, and it's actually pretty low. It's not very high. If we think that Tesla has the potential to grow between 40 and 50% in the next 10 years, then a 20 or 19.5% CAGR in the stock would be pretty disappointing. So we have to ask ourselves, why is that? Well, there's two reasons why that could be the case. Number one, we could be wrong, and the stock could grow at the same CAGR as the company grows, or we could have a switch in interest rate environments and valuations, which could drive much slower asset growth than actually the company growth. In other words, if the company grows sales by 40% and the stock only grows 20%, then something has to happen in the macro environment, for example, on the interest rate front or in valuation front, for that to happen. So we don't want to overestimate now our projections here. We don't have a whole lot of view on the macro side. Right now, the macro side is actually very benign for stocks, and we believe that this is going to continue with the large debt in the US and the low interest rate environment. We don't see a reason why this should change. The lower the interest rates and the lower the real interest rates, which is very important. Real interest rates are the key drivers for stocks. So with low real interest rates, the opportunity cost of capital is literally very low, and therefore we look at we look at the situation where Tesla as a stock can at least deliver the kind of growth that the company fundamentally is delivering, if not even more. So in that sense, the company should grow a lot more and be a much, much larger company than the $3 trillion in 10 years. Why would that not happen? Well, maybe the company cannot become the market leader in decarbonized and distributed decarbonized energy and distributed living. Maybe that is not going to happen. Of course, that is a caveat we have to put. That's what's called a discount rate. We believe that the company is in the process of building an innovation stack, which is exactly catering to that kind of theme. And therefore, we believe that, at least from what we see today, there's a very high likelihood that the company will be able to deliver that kind of market and create that market. We also believe that, like we discussed yesterday, that the health crisis currently is actually driving society towards a distributed living concept, which will help the decarbonized energy theme. So there's a lot of positive factors going our way, and we believe that therefore there is a good chance that we can have a company worth at least 3 trillion, if not more, in 10 years. Thank you.